This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Noramay Cadena of MiLA Capital. Noramay, thank you for joining us.
Thanks for having me.
So what was your background before investing in early stage companies? What did you do before this?
Yeah, I was in the aerospace business. I was really enamored with putting complex hardware products together and sending them up to space. So I spent over a decade working on either satellite systems or airplane systems.
Great. So what excites you right now?
I'm excited by innovation at the intersection of technology and manufacturing. I entered the venture ecosystem almost 5 years ago, and it was really this idea that I could create opportunities and help drive innovation by just about any founder looking to make a difference. And so at MiLA Capital, we're an early stage fund that is investing in founders building what we call tech you can touch. And there are a few sectors that are really exciting to us right now. Number one, ag tech and food tech. Number two, automation. Number three, mobility and aerospace. Four, climate tech. Five, health and wellness. So we've been making investments in these sectors already and are really energized by what's going on globally to enable these companies to be successful.
So what's your advice for people investing in that intersection of tech and manufacturing? What do you tell them to do before they write that first check?
Well, we're investing at a pretty critical stage, right? At MiLA Capital, we make pre-seed and seed investments. And so I think a lot of the other investors who come to us and ask for advice are coming in after we do. You know, the advice is to back founders who have found a niche, who are excited about the industry, who are really thinking about long-term sustainability of the business. So we focus on helping founders grow in a capital-efficient manner, which is growth, which is strategic growth with a focus on profit, with a focus on margin, with a focus on making small shifts and evaluating changes before making really big commitments. And so I would advise other investors to really focus on the same. What is the big picture business model for this company? And how can we collectively help them grow in a way that is capital efficient and that is going to drive sustainability long term for all of us who are part of this journey?
Great. And so on the other side of that table, what's your advice for people running startups in that intersection?
So don't focus on all these flashy things around being a startup founder. Don't focus on valuation. Don't focus on these growth metrics that can just seem like they are impossible to hit for Series A. We tell founders to really focus on revenue, focus on pilots, focus on things that are real. Letters of intent are, not 100% real. So we want happy customers. We want rapid iteration. We want a product that is informed by customers. And in building tech you can touch, the customer feedback is everything. And so we want raw prototypes out the door as fast as possible with customers using them and feedback feeding that iteration process. So worry about the stuff that is real, worry about the tangible, worry about sales, worry about margins, worry about building a team culture that makes people happy to come to work. Right? Worry about developing this cult-like following, whether it's from customers or employees, service providers or suppliers.
Well, great. Well, it sounds like you're working on a real basic, solid business model, not unicorn or hyper growth rates or what have you out there. It sounds like it's just a real business that people need to put together in order to be successful at it.
We're still a venture capital firm, so we still want to grow companies into the unicorn phase. That is still the greedy investor and capital manager in all of us, but we want to do so in a way that is responsible and sustainable.
Well, that's great. Well, let's talk about the state of investing in this section. How's the industry evolving? What changes do you see coming up for it?
Yeah, I would firstly say everyone can be a quote unquote hardware investor. Many firms say they don't invest in hardware until they do. And so we coach our teams and help them talk about their product in terms of sector and vertical and focus less on the actual product they're developing. So many business models now are reliant on recurring revenue or their software platform or a subscription service. And so we think of companies like Peloton and we don't think about them as hardware, and yet they are. And so that is one trend, right? Just about anyone will invest in hardware. Another trend is really the emergence of strategic investors in this space. We had 2 companies last year raise Series A, each raise a Series A that was 100% consumed by a strategic investor who was really new to venture investing. So that is a trend that is interesting and exciting for us, particularly around the sectors we're investing. If you think about the global strategic landscape, that just opens up a lot of sources of capital. Similarly, foundations are finding great intersection with impact, climate tech, sort of anything in energy, food tech and ag tech. And so capital flow from strategics, capital flow from foundations. And then thirdly, I would say the number of micro VCs is really just exploding in the US. There are now over 1,000 micro VCs or venture funds with under 100 million in assets under management, according to a report by First Republic Bank. And so that's exciting for founders. Founders have more choice, and they have choice by funds who are trying to carve a name for themselves in the ecosystem, which means that they're trying to add value. They're working hard to achieve results. And so their potential for a value add mutual relationship is high. I liken this to charter schools coming in and really having a lot of energy and wanting to deliver results and trying new things. And so I see the micro VC ecosystem as being just that. More options for founders.
Well, how much do you see climate change or sustainability coming into play in the next 10 years? What portion of the activity will be driven by those factors?
Yeah, I think it's going to evolve between now. So over the next 10 years, it will likely be over 50% of the types of companies we look at. If they're not directly classified as a climate tech company, then we will be looking at sustainable development goals within each startup, no matter what vertical they're looking at. And so this is the evolution of clean tech investing. I think climate tech makes us really think about a broader way to address sustainability and our planet. And that is exciting. It is exciting to see so many companies really focused on footprint, focused on carbon emissions, focused on really the value stream of their company. So not only what am I doing and how is it impacting the world, but who are my service providers? Who are my employees? Am I creating opportunities for my employees? Do I have an equitable distribution of opportunity in all the different countries in which I operate? And so there are even companies thinking about their cap table. Is my cap table providing opportunity in an equitable way? And my answer is farther reaching than your question about climate tech, but I think it's all related. I think there's a trend in thinking bigger and thinking broader and thinking around the full value stream.
Well, the 2 changes I see are climate change and then the commercialization of space. It just seems like it's starting to inflect upward, the number of things going up in the outer space atmosphere, and that is going to drive a lot of venture capital investment in the next 10 years as well. But nothing, of course, equals what will happen with climate change, given the grand scale of what has to go in there as well. Do you see anything on the space commercialization side as well?
Yeah, absolutely. This is one of the sectors in which we are making investments actually out of our first fund, and it's one of the segments in which we'll focus as we scale. We are very excited by what's happening in the space tech sector. There are new funds being created, focusing either solely or high percentage way on space tech. So we are seeing more and more leaving the items leaving the earth and entering space, but we're also seeing companies interested in mining materials, whether it's from the moon or elsewhere, and working on them in space. And so there is undoubtedly a lot of excitement around space tech.
Well, great. Well, let's talk about the investment thesis for your fund. Can you tell us more about your criteria and what exactly is your thesis that you're applying?
Yeah. Our thesis is that companies can really bring products to market in a capital efficient way, and that our team, we're headquartered here in Los Angeles. So given where we are, the experience of our three founders and our network, we can really help companies accelerate their growth. That's our thesis, right? There's talent. We can bring our network to bear and helping them grow and get to market in a capital efficient way. And as we think about the kind of founders that are really a fit with us, we really think about 5 values. First one is we're looking for a sense of curiosity. And that's really more important to us than a founder who has achieved product market fit. Secondly, we're looking for founders who are principled, and that's more important than polish. Thirdly, we're looking for founders who are creative, and that creativity is more important to us than experience. Our fourth value is around this intense hunger. And so we see this hunger as being a lot more important than someone who's aggressive. And the fifth value is really confidence. And we value confidence much more than we do arrogance. And so again, curiosity, a founder who's principled, creative, hungry, and confident. If we're talking about founders specifically, these are the types of principled leaders we're interested in. And then of course, like every other VC fund, we're looking at market opportunity, we're looking at viability, we're looking at team dynamics, we're looking at potential for exit and timeline to exit. And so those are all the things that are important. But from a founder perspective, at the pre-seed and seed stage, these values are critical.
So, do you have a few startups you can mention that fit that thesis and what they're doing?
Yeah, absolutely. We have an investment in a company called Caban Systems, CABAN Systems. They're building an intelligent energy platform for the telecom industry. And so this is a founder my partner Carmen met at a dinner and was just instantly impressed with again, her hunger, her curiosity, her confidence. And she had been part of an electric bus company and recruited her old boss to join her on this adventure for battery storage and eliminating diesel from the world. So this is a climate tech company. It's an energy storage company. It is a company at the intersection of tech and manufacturing. And this is a founder who is just really out to achieve. She has pilots in Mexico and Guatemala and Chile. So she is in various countries around Latin America and has an incredible speed of execution and hunger for getting things done.
Well, that's great. So you have a good portfolio there. You deal with a lot of startups in this space. What do you think the major challenge they face in launching their project? Aside from fundraising, is it regulatory? Is it technical? Is it market? Where do you see your startups spending most of their time?
It really is. It's a mix of things. Our investments are so broad that the challenges are exponentially broad. So one example is one of our earliest investments was in a company that is in the augmented mental health space, and they're building a wearable that can help users really manage their well-being through the use of cognitive behavioral therapy. And so the team has an incredible algorithm that can detect 5 emotions And one of their challenges is in working with the medical insurers and the life insurers, the amount of data and pilots and trials they have to run is pretty sizable and time consuming. And so they're in that loop now. And every time they onboard a new customer, there is some level of validation required. And so it's not as easy as developing a product, testing it, and putting it out in the market. But for them, it's continuously checking their algorithms, running pilots and trials, and reaching regulatory approval. That is one challenge they have. And other challenges are related to perhaps the FDA. We have another company that is helping prevent foodborne illness through a device that uses fluorescent spectroscopy to check for potential pathogens on the hands of, for example, a quick service restaurant employee. So if I'm a quick service restaurant employee, I head to the restroom, I have to wash my hands, I wash them, and then I can use one of these PathSpot technology devices to check and ensure that I've done a good job washing my hands, and I'll get a pass-fail. And so their challenge is testing and validating efficacy of the product, which they're doing through pilots all over the country now. And then anytime they move into a different industry, so if they go from quick service restaurant to the medical health space, then that is another data validation challenge for them.
Right. Well, you see a lot of applications out there in different sectors and so forth. If you had to pick one or two applications you think are really good opportunities for investors to pursue right now, what would you call out?
Oh, gosh. I think climate tech will continue to gain traction. It is not just a rebranding from clean tech. I think there's real opportunity in that sector. Food tech and ag tech continues to be a sector that is exciting. And I would add space tech if I had to pick three, but it's hard to pick three out of the five in which we are laser focused, because I think automation is also presenting a really big opportunity.
Well, great. We appreciate that. In the last few minutes that we have here, what else should we cover that we haven't?
I talked a little bit about the micro VC ecosystem and how it is growing and really driving options for founders. And I think another really exciting change is in the growth of diverse fund managers in the US. And a lot of these diverse fund managers are leading some of these micro VCs, but there's a new report by Kaufman that showed that diverse fund managers are really delivering results at a higher level. And so for me as a Latina in VC and one of perhaps less than 20 Latina partners in the US, I have the opportunity to work with another Latina partner at our fund, and we find that both incredible and a blessing, and we're both trying to drive sustainable change throughout the ecosystem. When it comes to diverse fund managers, we know that there's an opportunity for us to add value, to drive results, and to also drive investment in a more equitable way. Right. So reports show that when there's at least one female on the investment team, then the number of female founders who get funded is higher. When there's a diverse person on the investment committee, more diverse teams are funded, and they tend to in turn hire more diverse team members. And so this new wave venture capitalists is something that I'm passionate about and excited to bring to fruition in the next 5 years.
Yeah, I agree. The micro VC movement was quite a refreshing change of pace. Funds were getting bigger and more concentrated, and here micro VCs are going down and out and becoming much more dispersed and diffused, which takes funding in so many more other areas, that it was really great to see that trend continue as well.
Absolutely.
So how best for listeners to get back in touch with you?
I'm on Twitter, Noramay C. I'm constantly trying to up my Twitter game, so it's a work in progress. But my contact information is on our MiLA webpage, mila.vc.
Great. We'll put those in the show notes. I want to thank you for joining us today. I hope to have you back for a follow-up soon.
Thank you. Thanks for the opportunity.
If
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.